Do you know the US dollar has lost 97% of its purchasing power since the 1900s, or that the United States has over $33 trillion in debt? What would happen if the dollar was no longer the world's reserve currency? How would it impact your life? The answer may shock you. For decades, the US dollar has been a powerful symbol of stability and trustworthiness in the financial world. It serves as the backbone of global trade and a crucial, reliable store of value, underpinning the entire structure of the international finance. However, much like any great empire throughout history, signs of instability and weakness are beginning to emerge. What implications arise when the currency that fuels the global economy starts to experience difficulties? In today's video, we will examine the various reasons behind potential decline of the US dollar's dominance. We will discuss why this shift is not just a distant financial concern, but a matter that directly impacts you and your financial future. The rise of the US dollar to its position as the world reserve currency was not an instantaneous phenomenon, but rather the result of complex series of events that unfolded over several years. In the aftermath of World War II, as nations sought stability and means of facilitating international trade, the Bretton Woods Agreement was enacted in 1944. This landmark agreement effectively designated the US dollar as the cornerstone of global commerce, establishing it as the primary currency for international transactions. At that time, the dollar was uniquely backed by tangible assets, gold providing reliability and confidence and encouraging countries to adopt it as their standard. Nevertheless, as global economy transformed and the shifting demands began to reshape financial landscape, the dependence of the gold standard diminished. This gradual decline reached a critical turning point in 1971. This year will be etched in economic history when the United States boldly abandoned the gold standard. This transformation moment signified a radical shift in financial paradigm. The dollar was no longer tethered to the predetermined quantity of gold, a constraint that had long defined its value. From the juncture onward, the dollar's valuation has increasingly depended on a more abstract yet immersing influential element: the confidence that nations, corporations, and individual investments in strength and stability of the US economy, coupled with its intricate financial systems, has evolved into a fundamental foundation of the dollar's significance. This reliance on trust underpins the dollar's value and shapes its status as an unparalleled currency for international transactions and reserves. Consequently, the dollar has emerged as a cornerstone of global commerce, influencing economies and facilitating trade on an unprecedented scale. Now, three massive challenges are threatening that trust. Inflation is the time progresses, the phenomenon of inflation has significantly diminished the dollar's purchasing power. We are witnessing an alarming trend where the costs of essential goods and services are soaring at the pace of outstripped wage growth, leaving countless families grappling with financial instability and struggling to maintain their standard of living. The national debt has reached an unprecedented level, surpassing a staggering $33 trillion, indicating that the United States is borrowing at a historic rate, repaying this momentum debt and its mounting interest obligations. Immense pressure on the economy, raising concerns about sustainability and future economic health. The loss of global dominance. Concurrently, countries such as China, Russia, India are strategically taking steps to lessen their reliance on the dollar, which could lead to a fundamental shift in the dynamics of the global economy. This movement away from the dollar dependence may alter traditional economic alliances and create a new geopolitical landscape with far reaching implications. Today's urgent challenges are far from theoretical construct or abstract ideas. They manifest in real time, carry tangible repercussion. The implications of these issues extend across the entire spectrum of society, affecting every strata of our community. From influential and high stakes investors on Wall Street, those decisions can influence market dynamics, to the diligent individuals and families navigating their everyday lives. All can feel the ripple effects of these challenges. Each person's experience is intertwined with these broader societal issues, underscoring the necessity for collective response mitigate their impact and foster reliance across all layers of our social fabric. Inflation extends beyond the mere price of increase, fundamentally pertains to erosion of the purchasing power and the value of the money. Many individuals have experienced frustrating sensations that their hard-earned paycheck no longer stretches as far as it once did. This is a familiar feeling shared by countless people in today's economy. To put things in perspective, in 2022, inflation in the United States skyrocketed to an astounding 9.1%, marking the highest inflationary level in 4 decades. This significant spike means that everyday essentials and services have become considerably more expensive, forcing consumers to reassess their budgets and spending habits. Imagine you saved $10,000 a decade ago and kept it in cash. Today, that money buys significantly less due to inflation. This loss of value acts as a hidden tax, eating away at savings and reducing purchasing power. Governments often raise interest rates to combat inflation. While this strategy can potentially temper economic activity, it has significant repercussions. On one hand, higher interest rates can help stabilize prices by reducing consumer spending and curbing excessive borrowing. However, this response also has the downside of making loans costlier for businesses and individuals, and increased expenses associated with borrowing can dampen investment and expansion opportunities for companies. At the same time, individuals may find their capacity to make significant purchases or investments, such as homes or cars, needs to be improved. Consequently, these heightened financial pressures slow all over economic growth and can lead to increased financial strain for many economic stakeholders. Historical examples show how damaging inflation can be. In the 1970s, skyrocketing oil prices and inflation led to a stagflation, a toxic mix of stagnant economic growth and high inflation. Today, some experts warn we could be heading down the similar path. The stagflation figure for over 33 trillion in the US national debt represents far more than a mere statistics. It is a problematic liability that continues to escalate with each passing moment. This debt is a financial albatross, constraining future economic opportunities and posing severe risk to the nation's physical health. Consider this analog to truly grasp the magnitude of this issue. If we conceptualize average family in the United States as earning an annual income of $60,000, this family would be burdened with an overwhelming debt of approximately $450,000. Such a financial predicament undeniably create enormous stress and limit the family's ability to invest in essentials like education, healthcare, as well as retirement. It's similar to how our national debt hampers budget decisions and economic growth at a micro level. Why does this issue hold such significance? To begin with, obligations to service this towering debt necessitates enormous interest payments, which place a considerable burden on the national's finances. In the year 2023, for instance, the United States allocated over 600 billion were specifically for interest payments. This staggering amount surpassed the total funding for critical areas such as veteran benefits, education, and transportation. This scenario illustrates not only the vast scale of the debt, but also highlights the priorities that may be compromised due to these substantial financial commitments. Furthermore, elevated national debt levels significantly hinder the government's ability to address and respond to potentially future crises effectively. Take, for instance, the unprecedented level challenges posed by COVID-19 pandemic. During this period, the implementation of various stimulus packages became essential to bolster the constraint of the economy and amidst widespread disruption. However, it raises a critical concern. What will happen if we are confronted with a major crisis in the future, especially if the government's borrowing capabilities have already reached their limit? This precarious situation could leave the government with few options and insufficient resources to act swiftly and effectively, ultimately impacting the nation's resilience in times of emergencies. Ultimately, one of the most critical risks to consider is potential erosion of investors' confidence. This issue becomes particularly pronounced when it looks at the major economies such as China or Japan, both of which possess substantial holdings of the US Treasury bonds. Should these nations begin to question the United States' competency in effectively managing budget debt, they might opt to divest their stakes in these securities. Such as decisions could trigger a cascade of financial repercussions, resulting in increased borrowing costs for the government. Moreover, this action can contribute to further depreciation of the dollar, jeopardizing the currency's stability in the global market. Thus, the stakes are high, and the implications of shifting investors to sentiment cannot be underestimated. The United States dollar has long held a prestigious position as the world's primary reserve currency, bestowing upon America a range of substantial advantages that are difficult to overstate. This unique status enables the United States to borrow money at a considerably low interest rates that may other nations, providing a financial cushion that supports various domestic and international incentives. Moreover, the dollar's dominance is a critical tool for the US to maintain influence on the global stage, allowing it to exert considerable sway over the international trade and financial systems. However, this entrenches dominance in increasingly being challenged by various emerging factors that indicates a shifting landscape in global finance and economics. As other currencies gain traction and countries explore alternatives, one answered supremacy of the US dollar may be at risk, prompting a re-evaluation of America's economic and global political strategies in the future. China, a formidable player on the global economic stage, has taken significant steps towards establishing a digital currency. Innovative financial structure is not only a reflection of China's technology advancement, but also a strategic move to enhance its monetary sovereignty. In addition to the digital yuan, China is actively forging trade agreements that deliberately circumvent the use of the US dollar. A notable example of this shift occurred in 2023 when China and Brazil entered into a landmark agreement to conduct their bilateral trade using their respective. This arrangement marks a decision effort to diminish their dependency on the greenback, signaling a broader trend among nations seeking to assess greater control of their economic transitions and reduce the dollar's influence in global trade. The BRICS nation, which consists of Brazil, Russia, India, China, and South Africa, are currently engaged in discussing the exploration of regarding establishing a unified currency. This ambitious initiative aims to strengthen economic collaboration and enhance trade among emerging economies. In this endeavor comes to filtration. It has the potential of significantly challenging and destabilizing the long-standing dominance of the US dollar in global finance. The implications of such a move could reverberate throughout the world economy, reshaping trade dynamics, influencing the monetary policies of other nations. When traditional allies are diversifying their currency reserves, the European Union euro and Japan yen are becoming more prominent in the international trade. This trend signals a shift away from the dollar-centric world we've known for decades. We must focus on this critical point. Should the US dollar relinquish its esteemed position as the leading global reserve currency? The consequences could be disastrous, could trigger severe economic upheaval within the borders of the United States and throughout the world. We would witness a domino effect, the destabilization, the destabilized financial markets drives inflation rates to alarming heights and fundamentally disrupts the delicate balance of international trade. The fallout from this potential scenario would ripple through every corner of the globe, impacting governments at all levels, corporate entities, and navigating business landscape, and ordinary citizens try to make ends meet. It is an utmost importance that we fully grasp the seriousness of this situation, the widespread ramifications it could impose on the financial system and economic structures that underpin our livelihoods as we understand them today. For individuals, the repercussions of such a shift could be both immediate and profound. The cost of important goods, ranging from the latest electronics and the stylish clothes to essential food items, would skyrocket, making them significantly more expensive and potentially unaffordable for many. This sudden price increase would not be limited to specialty items. Even everyday necessities such as gasoline for transportation and groceries for daily meals would experience notable price hikes. As a result, many households would find their budgets under considerable strain, forcing families to make tough choices about their spending habits and possibly sacrificing quality and variety in their. The overall financial impact on the average consumer would be severe, leading to re-evaluation of their financial priorities and perhaps even altering their standard of living. The cost of raw materials and foreign trade would rise for businesses, leading to layoffs and reducing investment. The ripple effect on economy would trigger a deep recession. For governments worldwide, the potential loss of United States reserve currency status would signify diminished Americans' capacity to exert influence over the global affairs. The US dollar is not merely a medium of exchange. It serves as a critical instrument of diplomacy and a symbol of economic power on the international stage. Losing this status would have profound ramifications. In this scenario, the United States would have to relinquish some of its strategic advantage, allow other nations to assert themselves more forcefully in areas where Americans' interests are at stake. This shift could alter the balance of power, changing how nations interact and negotiate globally. Thus, American policymakers must consider the long-term consequences of their declining in the dollar's dominance. This potential risk of hyperinflation is a critical issue that must not be overlooked. Historical precedents in nations such as Zambia and Venezuela have vividly illustrated the devastating consequences they can arise from collapsing currency, resulting in widespread economic turmoil and chaotic conditions. These examples are stark warnings of what can happen when physical discipline is lost. While it is true that the United States has implemented various safeguards and measures designed to prevent such an occurrence, these protections could be more foolproof. The economy's stability is inherently linked to global confidence. Should that faith diminish for any reason, it could set off a chain reaction leading to significant downward spiral in economic performance. A sudden loss in trust could undermine the financial foundation that have long supported the US economy, highlighting the need for continued vigilance and proactive measures to ensure stability. Although the hurdles before us are considered, it is essential to recognize that the situation is manageable. The United States continues to possess several significant advantages. They fortified its standing in the global landscape. At the heart of America's economy lies a vibrant ecosystem of groundbreaking companies encompassing everything from towering technology giants to pioneering leaders in the healthcare sector. This relentless spirit of innovation catalyst economic expansion is crucial for bolstering global confidence in the dollar's value. The relentless pursuit of new ideas and solutions fuels domestic growth and positions the US as a leader in shaping future industries. The extensive footprint of US military across the globe is the cornerstone of the dollar revival status. Countless nations depend on America's security assurances, which create an intricate web of reliance that ultimately enhance the currency's appeal. This global military presence serves as a deterrent and a reinforcement that the dollar's stability in international markets undermine the correlation between military strength and the economic influence. Despite the political discord that can often seem overwhelming, American institutions, most notably the Federal Reserve, remain steadfast and are viewed as some of the most stable and independable in the world. This institutional resilience offers a reassuring backdrop for investors and international partners, fostering an environment where trust in the US financial system can thrive even amid uncertainty. To ensure the dollar maintains its strength and preeminence, policymakers must address pressing issues such as inflation, the escalating national debt, and constructed effort to regain international trust. These objectives are not just short-term fix, but rather long-term strategy that will demand difficult decisions and collaborative efforts on a global scale. The path forward will undoubtedly require perseverance and committed to foregoing alliances. But the potential rewards of robust, resilient dollar are well worth the endeavor. The US dollar stands at a crossroad. Its challenges are unprecedented, from the rising inflation and unsustainable debt to the erosion of global dominance. But while the risks are real, so too are the opportunities for recovery. Will we take the necessary steps to protect the dollar's role, or will it let those challenges spiral out of control? What do you think? Can the US dollar retain its dominance? Let us know in the comments below. For more insights into global economic trends and how they could affect your future, like this video, subscribe to the channel, and hit the notification bell to stay updated. Your support helps us bring you information that matters